Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at, as per the title of the video, an extremely bullish signal which seems to be playing out in favor of the wider markets as well as for Bitcoin. And there is also one lurking danger which we just need to be aware of as we go into the final stages of the Bitcoin bull market. And as per usual, we'll have a rundown on the various timeframes for Bitcoin to make head or tail in terms of the trajectory for Bitcoin, as well as look at the 60-day cycle to know exactly where we are. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to be having a look at the bullish signal that seems to be playing out, which is incredibly important for Bitcoin and the wider markets in terms of providing the liquidity for the markets to move forward. And that is the DXY, the dollar. And our target from here was for a multi-year fall to much lower levels here. But what is significant, we seem to have fallen out of this particular range now, and it looks like with a higher probability that the dollar is going to be going to much lower levels to allow at least the next few months for the markets to really have a big rally, which we obviously expected as part of the 4-year cycle for Bitcoin. So it looks quite obvious from here that we had this particular range where the dollar had been range bound between these 2 points, around here, around about 99, call it 100, and at this point here, around about 107. And we had this fake out, and really this was the opportunity for the dollar to continue going and making new highs over here. It obviously failed to do that. And as part of our 4-year cycle, we would have expected that to happen because we are expecting some sort of a conclusion either at the end of this year or maybe have an extended cycle as per the last video that I did last Monday. So what we had really was a fake out and a fall back into this particular range. And what we've really seen in recent weeks is that this particular support has now been well broken to the downside, and we've come up here to test the old support as resistance. And the reason why I wanted to cover this is because we've now broken down from that. So this is a classic charting move for the dollar, because when you look closely here, we had this attempt at the end of July to try and get back above this old support that we had had. And what's really happened is that there's been a big rejection of that with that long wick at the top. And then we had this inside bar candle the following week, which was last week. And this week, we seem to be getting rejected already from those levels. So this looks like a high probability play that we're going to be running down with the dollar to much lower levels. And this obviously gives us the liquidity for the markets to rally much higher. And this is where Bitcoin, being in the final few months of the traditional 4-year cycle, unless we get the extended cycle as per the reasoning I gave last week, we seem to be having a much bigger prospect of a big rally coming up for Bitcoin. And the question is, do we have more confluence of this particular narrative playing out? The one very strong signal that's also providing confluence with the dollar that there's going to be a big rally coming up is that the target rate probability for the 17th of September Fed meeting is 88% for a cut of 25 basis points down to 400 to 425. And there is even talk of a 50 basis points cut because it seems very much long overdue, and this should really trigger the markets up. We do have the CPI data coming tomorrow, which should confirm this possibility. So we do need to look out for the CPI data coming out tomorrow at 8:30 Eastern Time, 1:30 GMT. So we can look forward to a lot of volatility tomorrow, an hour before the markets open. Okay, so what we're really expecting here tomorrow at 1:30, it's not 12:30, it's at 1:30. We had in June 2.7% year-on-year inflation, and the consensus this time around is 2.8%. So if this comes in different to this figure, then we can expect quite a bit of volatility tomorrow. And that may well feed into the interest rates set by the Fed on 17th of September. So very important to keep abreast of what's going on with the inflation and the wider economic indicators. So how does the lowering of the dollar and the economic indicators, how are they feeding feeding into the Bitcoin price? Well, obviously, if there's going to be more liquidity, then we have a great chance for Bitcoin to make further progress. Especially now, we're coming towards what we would have regarded as the end of the 4-year cycle. And as I said last week, we should really keep an open, fluid and flexible approach to this and let the price dictate our actions over here. This is where we would have expected the traditional 4-year cycle to end, and that may well be the case as the price for Bitcoin moves into these final few months of the year. It really will depend on how the Bitcoin price starts to behave in the next few months. If you start getting big moves on the monthly candles, then that may well be a signal that we're going to be topping out very shortly. But if we get the slow, steady moves that we've been getting here, these little steady moves every month, we're getting higher highs and higher lows. If we continue to do that, then we may well get this extended cycle into 2026. And as we've seen, there's quite a lot of different players with different mindsets and different intentions in this cycle than we've had in the previous 3 cycles. So the whole dynamics of this 4-year cycle has actually changed. And because this is the first time that we're experiencing this, nobody can really say definitively what the outcome and the results will be of that different mindset. This is where we are in the current 4-year cycle. We do expect some good moves at least in the next few months, and the dollar and the interest rate cuts coming up on the horizon may well be giving us that clue that opens the door for these big rallies to come. Okay, so what we'll do is we'll have a rundown on the various time frames for Bitcoin to see exactly where we are on the larger time frames as well as the shorter term time frames to give us a good guidance as to where the trajectory of Bitcoin is heading. So looking at the monthly time frame, if we put on the 8 EMA, this is the one that we've been guided by so far, that once we break below the 8 EMA, that'll be our clue that the market has come to an end. And obviously we're far away from that, and the trajectory is certainly to the upside. As we can see, we're getting higher monthly closes every single month, and the last 3 months have actually closed with all-time high closes on the monthly time frame. So we would certainly expect that to continue with the last few months on the horizon. And regarding the bearish divergence that I've been pointing out over the last many videos, this divergence may well be now coming to an end. It's really just come up to that level virtually. So what we really want is this candle to be a big move for the upside on the monthly, then followed by the next month, and this will push the RSI to higher levels and negate and invalidate this bearish divergence. And the one thing that we've really got, which should be giving us fuel even further here, is that we have a hidden bullish divergence on the underside here. So while the price made a higher low here, on the RSI it made a lower low, and this big move that we've been getting is really being caused by this hidden bullish divergence that was being created. So what we really need now is for the bearish divergence to be invalidated by bigger moves on the monthly time frame here. And moving on to the weekly time frame, once again, we're well above the 8 EMA and we're well above the 21 simple moving average. So the trajectory is certainly on a continuation path to the upside here. Once again, with the RSI, we are getting bearish divergence where we've got a flatlining RSI, whereas we had a higher high on the price here. But once again, once we start moving higher, this should negate the RSI divergence. So both on the monthly and the weekly, we're very much good to go to much higher levels. Okay, before we move on to the daily time frame and look at the daily time frame through the eyes of the 60-day cycle, just want to make everybody aware of where the high for the current rally that we're having now, because what we've got is a channel that actually extends back down here. But the recent channel is really from this point here. In March 2024, we found resistance here and over here. So the chances are, the probability is, depending on when we make our move towards the top of this channel, look out for resistance on this trend line. So as we'll see, the current 60-day cycle will extend into the early part of October. So if we take this line and extend it a little bit further, this will be the October time, but obviously about 10 to 15 days before that is when we can expect the rundown into the decline of the 60-day cycle. So what we can expect just by that time frame, that in the last week of September, so if the Bitcoin price is going to come and hit this channel, it would hit at the end of September. So this would be the trajectory up to the last week of September, around about here. So this price would be around about the 150,000 mark. So this could well be where it might top off according to this particular channel. Of course, anything can happen. And of course, nobody's making any predictions here. We're just looking at the charts, reading what they're telling us and extrapolating that information into probabilities of what may possibly happen. So this is just something to look out for, some insight into what I'm seeing with the chart development, that by the end of September, if the price can go up to anywhere around the 150,000 mark, and remember the 17th of September where the interest rates looked likely to be cut, and instead of the 25 basis points, if the Fed decides to do a bigger cut to 50 basis points, then this could rally right into this particular resistance here, because by this time the 25 basis points cut will be discounted, of course, and this may well become the sell the news event at that point, and then that gives us the decline into the 60-day cycle in the first week of October. So just something to look out for, very important when you look at these channels. And here is the 60-day cycle, so we'll have a look at the daily time frame through the 60-day cycle as we normally do, and what we can do now is to confirm day 59, which was the end of this previous cycle and the beginning of this new one. And the private members that we have here at Wisdom Bites will know that we've been following this cycle very, very closely, and what we were waiting for was a break above this 116 level, this candle here. Once we got above that, because this was also support all the way here, so once we got above that, that was a confirmation that we've now got a new cycle. So this is where we are now. We've got a new cycle on our hands, and what Bitcoin has just done overnight from Sunday night to this morning on Monday is an incredibly bullish move, because when you really look at this, the higher probability play was for Bitcoin to have some sort of a rejection here. Now we could obviously get that still. What we have done is to slice through that 120,000 resistance line. So we can see quite clearly this is a well-defined level at 120. So we got very strong rejection at the 120 here, got rejected at 120 here, didn't quite make it to this point, and obviously we had the high of the 123 right at that line as well. So this is where we're at, and at the moment anyway, on the daily time frame, we're slicing through that 120 level. Of course, this could pull back a little bit, and we may well get that rejection at that level. And the reason why I would have expected that is because we've got the left shoulder here and the head, and you would have expected with a higher probability for this to be consolidating around the 120 before the big move. And so far what we're doing is we're actually punching through that 120 at the moment. And if we can close above that with a daily candle today, then we've got some very big moves to come, and we may well take out the 123 all-time high. And the beauty about these cycles, what they do is they give us a very good guidelines in terms of the time for the trend to continue or discontinue. So what we've got in this cycle here is that the midpoint is now quite far away, which means that Bitcoin has quite a lot of breathing room to really make some headway into the mid-cycle, where we would expect a decline into the mid-cycle point. And if we can get above the 123 and make the decline come and retest that 123, and then we've got the rest of the second half of the current 60-day cycle then to make the big moves into 130, 140, 150. So these are all probabilities that are going to happen. Nobody can say definitively where it's going to go. It will obviously depend on the hundreds and thousands of maybe even millions of people out there deciding to buy or sell Bitcoins in the next few weeks and months. But the charts are certainly telling us that it's really ready to start making the big moves to the upside here. So just to give you the time frame of this current 60-day cycle, the midpoint is going to be in the first week of September, and the end of this current cycle will be around about the first week of October. And our timeline for the end of the current traditional 4-year cycle would be around about October, November or December. So what we're really looking at is some signals, some signs of what Bitcoin wants to do in this very critical period coming up, because depending on what we do here will determine the next cycle. Now, this next cycle is then going to be the most important. If we don't top out in this next 2 months, then knowing that the previous 3 cycles ended in November, December and November. So far, the 3 previous cycles have ended in November and December, November twice and December once. So if that pattern is to be followed, then we're going to be ending up anywhere around November, December. So that will be, depending on how this current cycle plays out, the cycle here from October onwards. So the October cycle will take you into the midpoint in November and the end of the cycle in December. And you can see how that's now lining up to be a possible end of the current 4-year cycle. So very important to understand the time frames and where we're at and where we're heading, and let the price of Bitcoin dictate the actions in terms of what you see and where the signals are, and knowing when the market is going to top out. And the question is, what price can we expect in the current cycle? So I just want to give you a few targets to look at, and that's done by looking at the previous high at 69,000 at the end of the previous cycle in November 2021, and taking the level down to the bear market here. And as we've done in the past, we were expecting the target of 128,000 to be met in the last cycle that we had, but we came up to 123 instead. So this 128,000 is still on the table because this is the 1.414 Fibonacci level. So this to me looks like it will probably get taken out, but do expect some consolidation around the 128,000. And the one next above that is the 1.618, and we know Bitcoin has a very high affinity towards the 61.8. And I've mentioned this target many times before, that 175, that this looks like a good probability that it's going to get somewhere around there. And the trend line we had a look at was around about 150. So what you could quite easily get is for the price to slice through the 150, get to the 178, and then leave a big wick all the way down to then 150. So this is how the 175 can actually be played out with that trend line. And if we did have an extended cycle and Bitcoin made steady progress throughout the end of this year, then the extended cycle would then probably go and hit this 2.272, and that's at 467. So if we do get an extended cycle, then this becomes a target very much on the table for 2026. So let's see how this plays out. Very important to keep abreast of the price movements of what Bitcoin wants to do. But one thing I do want to show you is the pi cycle, because what we know is that the pi cycle traditionally has signaled the end of all of the previous 3, as well as all of the 5 peaks that we had within those 4-year cycles. So what we're really looking at here is that we've now got the trajectory of the green line of the pi cycle, the 111 simple moving average, has turned very decisively to the upside. If the price for Bitcoin starts moving very much to the upside in a big rapid way, we could get this green line crossing over the red line, and then we get the same signal that has signaled the end of the previous 3 bull markets, doing the same thing again for the current cycle. So very important to keep an eye on the pi cycle, because you can see with this curve here, we're certainly moving to the upside, to some sort of a conclusion in this area, as long as the price for Bitcoin goes rapidly up between now and the end of the year. If it starts moving gently into that, and this is where the extended cycle comes really into play. So I mentioned at the beginning of the video that there is a danger lurking that we just need to be aware of. It doesn't have to play out, but it's really to do with what we cover here in the private member section with the Bitcoin miners. And that is, as you know, I try and give you a balanced view. It's not always bullish and it's not always bearish. There is always a big balance between the two. Sometimes the bullishness is the one that's dominant, and sometimes the bearish side is dominant. So just to put the context here, the next few months look incredibly bullish for Bitcoin. And sometimes there is a bearish factor that we just need to be aware of. It doesn't have to play out, but it's something that we should take into account. And that is that in many of the Bitcoin miners, the monthly candle close was actually highly bearish. And what I mean by that is that if you look at Marathon Digital Holdings as an example, the July candle here, you can see quite clearly it's a shooting star bearish candle at the top of a trend. Now this really has a powerful bearing on the price action coming to the downside. And we can see that this kind of a candle seems to play out with a high probability. So we're talking about 70 to 75%. This tends to play out to the downside. And we had that here recently, where we had 2 candles to the downside. We had another one here, where we had a few more candles to the downside. We had another one here, where we had many candles to the downside, etc. So you can see, even if you go further back, you'll see that this candle here, which was at the top of a trend, also brought the price down. So this has a high probability move to the downside. Now we also have to factor in that we are at the final stages of a bull market. And at that stage, these types of candles on their own are not powerful enough to do that if the other circumstances, other situations, other factors overpower, and if those are much greater in bullishness, then this kind of a candle can easily be ignored to the upside. So just bear in mind, this is what's happening, just something that we need to be just aware of. And this print was for most of the Bitcoin miners. So I'm going to go through this in a bit more detail with the private members here in the Wednesday video that's coming up, where I'll be looking at some of the other Bitcoin miners and to make head or tail about this particular bearish situation that might well be developing. And we do cover Bitcoin as well as the Bitcoin miners in the two videos that we do specifically for the private members on the Wednesday and the Friday. And we also do on a daily basis, Monday to Friday, at the end of the trading session, we do a daily market update. And in these markets, information is absolutely key. So I try and cover as much information of what's gone on with Bitcoin as well as the Bitcoin miners on a daily basis, showing exactly how the charts are developing, where we're bouncing off, where we're heading, what's about to happen, what's happening with the 60-day cycle, etc., with the various indicators. We also have two portfolios running. We're also following two particular portfolios with the Bitcoin miners, a passive portfolio as well as a trading portfolio. And the figures are coming up to the 500,000 mark at the moment. And with the ratio trades, we're just looking at a few opportunities at the moment. And these are the profit and losses that we've had with the ratio trades since the beginning of 2024. The blue numbers are the profits and the red numbers are the losses here. Many people ask us about the ratio trades. So I've recently decided to add in new members introduction video which goes into detail about how ratio trades actually work, and they've proved to be an incredibly profitable area for those members who actually taken part in those ratio trades, as I've just shown you with the various trades since the beginning of 2024. So while a lot of people have been hating on the Bitcoin miners because the perception is that the Bitcoin miners have badly performed Bitcoin, and for part of the cycle that's been the case, but this is the actual facts of how the various miners have actually fared in relation to Bitcoin. And this chart is courtesy of Talking Investing. So a shout out to Talking Investing for providing this chart. And what this shows is, this is the Bitcoin performance of 653% from the cycle low at the end of 2022 to the current prices. So this is Bitcoin's performance. And as you can see, 3 of the Bitcoin miners have outperformed Bitcoin, one by a large amount. And obviously there are others that have performed less than Bitcoin. So this is the actual balanced view rather than have a skewed and biased view against the Bitcoin miners. Yes, they could have performed better. And we really don't know what's going to happen in the next few months. And certainly some of them haven't performed as well as Bitcoin. And this is the real facts in the charts. So whatever anybody's biased view about the Bitcoin miners, you can see quite clearly from this particular chart, this is the WGMI, which is a basket of the ETFs for the Bitcoin miners against the Bitcoin price. So this gives you the honest picture of what's really happening. And you can see quite clearly, the relationship of Bitcoin with the Bitcoin miners is actually quite cyclical. So this is where the Bitcoin miners have actually outperformed Bitcoin. This is where Bitcoin has outperformed the miners and vice versa. So this is exactly how it's been very cyclical. And since we bottomed out at this point here, the Bitcoin miners have actually outperformed Bitcoin up to Friday's close by around 54%. And those who are interested in the charts will tell you that when you come across a resistance line 4 or 5 times, then this has a very high probability to break to the upside. So this is where the higher probability is for the Bitcoin miners over the coming months to outperform the Bitcoin price. So whatever your views are about the Bitcoin and the Bitcoin miners, and we know that obviously from this period especially, which was at the end of 2024 to April 2025, it was a very bad underperformance of the Bitcoin miners. But since then, we've had a very good outperformance by about 54%. So nobody knows where this is going to go, but the charts seem to be telling us that the trajectory is for a continuation to the upside. So if you're interested in following the Bitcoin miners, and always remember, you don't have to buy the Bitcoin miners. You don't have to do any trading. There's no obligation to do anything at all. The majority of the members don't really trade very regularly anyway. The majority are there for the extra 2 videos on the Wednesday and the Friday, as well as the market updates, so they can keep abreast of exactly what's happening on a daily basis, because in this space, information is really key. And if you're interested in the Bitcoin miners and the Bitcoin analysis and everything else that we do in the member section, and all you have to do is click the join button below any of my videos, and also in the description box there's a red button here, and if all that information is worth the equivalent of a coffee per week, which comes to £12.99 a month, then join the growing band of the private members here in this channel. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.